I think people, when they look at the price of any of these assets, they really need to take a step back and just say, is this asset class here to stay? Where is it going to be in 5 years? And I think most people are really excited that it's here to stay. Why be bullish this year? There's more access points and more institutions moving into the space than ever before. There's more infrastructure shaping up. What the price does in the short term is anyone's guess. But there's really exciting things happening. Last year we had the narrative around DeFi and NFTs, and now we're seeing things like staking emerge, which is the ability for people to generate yield off these assets. So there's a lot to be excited about as we move into 2022.
Brian, it feels like pension funds, et cetera, are going to need to be in this space at some point. And I wonder how you see that trajectory happening to get like old school hedge funds, old school pension funds kind of in this space. How do you do that when you have the volatility that we've seen, say, last year?
So the space is going to remain to be volatile. I think anyone who thinks that that's going to go away anytime soon is clearly going to probably be mistaken. But the question what are the access points going to be? The more structured products come to market, the better for these pension funds. That's what they need. They need ways to get access points to own these assets in ways that are safe and secure and fit more into the traditional box that they're comfortable with. Again, the volatility will continue to be there. One exciting thing I think for pension funds is they can play the picks and shovels, but they also are going to look to things like, as I mentioned, staking to generate yield on these traditionally unproductive commodities. The fact that you could take these assets and generate a yield of 5 or 10% a year is something that they're going to want to participate in. And the last point I'd make is this is such an asymmetric bet. It may seem to a lot of investors who are new to the space like it's done this huge run up from assets that were just a few dollars to tens of thousands and Bitcoin all the way up to almost 70,000 last year. But in 5 years from now, where can these assets go if they continue to get support globally? There's still a lot of upside in this asset class. And if you can turn off your stomach to the volatility and have it be an appropriate piece of a portfolio, I think it's important for people to participate, with a couple percent, whatever it is that's, meets their mandate. It's going to be a hard asset class to ignore long term.
Well, and then to that point, it's going to need to then move on its own weight. And it feels like it's in some ways been tied to gold and then tied to tech. What's the correlation in this space right now to other assets?
I think it's hard to tell. I mean, there's certainly this narrative around Bitcoin that it's digital gold, and maybe it is, maybe it isn't. I think over time, it'll untether itself from other assets. It's certainly still being treated very much as a risk-on asset, and there's this duality between, is it a hedge? Is it, as you're saying, closer to growth and tech? Maybe. I think we're still kind of feeling out where it's going to go. And as more investors get conviction that the asset class is not going to be pushed away by governments or squeezed out, they'll be more comfortable holding through that volatility and seeing where it's going to go again in kind of a 2, 5, or 10-year horizon.
Well, you brought up the government, and I feel like anecdotally I've heard like old school hedge funds are saying, I don't know, the government's going to squash it, forget it, I don't want to own it at all. What do you think the government's going to do with cryptocurrencies? And I mean, any government.
So, there's 2 points I want to make on this. The first is we saw what happened with, China pushing it away last year and saying, we don't want this in our jurisdiction. We're going to focus on a central bank digital currency. And that's a real opportunity for the US to step in and say, we're going to welcome this new asset class that clearly is growing. The US has done historically very well, of course, by embracing tech. So this is an opportunity to lean into it instead of pushing it away. The second thing is there was a hearing that I always think about back in late 2013 on C-SPAN, where they asked every government agency to come out and say, what do you think about Bitcoin? And they all said, we're not here to push away a new technology. What we want to do is make sure it's being used in an appropriate manner, that it's being regulated kind of from the fringes, the exchanges. And then we're going to build new tools and hire new people to make sure that it's being used in a compliant way. And I think that is very much the intention of government. It's not to push it away. It's to make sure that it's being used in an appropriate way. And they'll find ways to do it. And there already are technologies and great platforms that are focusing on that.
Okay, Brian, before I let you go, we talked about a lot of different evolutions and ways to invest. What is your favorite way to play the crypto move?
Well, I think you have a barbell of people who want to hold these assets direct. They're going to take possession of them and custody it in a wallet. that they might have on a USB key or on their laptop. And then there's now these, structured products that are coming to market. Last year, of course, we saw the first futures-based Bitcoin ETF hit the US. And so there's different ways for different types of investors to access the asset class. It's really up to how they want to treat the asset, how they want to hold it, how they're comfortable, and then assess, how they want to build that into their portfolio.